Welcome to Subramani. Why did the market crash on Monday? Sorry, this is now being compared to Black Monday, but let's see what actually happened. The market fell definitely maybe about 3%, which translates to about 15 lakh crores. So tomorrow, on Tuesday rather, the expectation of headline is market crashes 3%. 15 lakh crores wiped out. How much did you lose in your portfolio? Ambani lost maybe 1 lakh crore or something like that, right? You will see all these headlines, and you will be told that you should see all these headlines and not panic. Let's get things right. I don't think the market was at 79,000 even in June. In July you reach 79,000, maybe in July you reach 80,000, and in August you're back to 79,000. Have you really crashed? To me, this is not a crash. This is not even a hint of a crash. But when the market comes down by whatever percent, 1%, 2%, 3%, 5%, 10%, you have to give a reason why it has come down. So here are my reasons. One, the market was bloody overstretched. Let's make no mistake about that. Every Tom, Dick and Harry who had 1200 rupees went and bought 3 shares of ITC, right? If you had more than that, you bought more shares. But yes, everybody bought, and it's not something to be scoffed at, because if 1 crore people bought 4 shares of ITC, it means 4 crore shares delivery was taken, and end of the day, because they could not afford to take delivery even for 1200 rupees, they sold, right? So these kind of investors were there in the market. They are there in the market, and they are big in numbers. So a little sign of a fall will cause panic, because the brokers will call them at 3 o'clock and say pay the margin or I'm selling it off. They don't have the wherewithal to pay margin at 310 or something like that. So yes, straight away all these shares get sold. So a little bad market will be made a worse market by all the margin sales which happen. That is obviously one reason. Second is fear of a US recession. It's always been there. The US recession, if you watch the US debate between Biden and Trump, it looked more like two men in a bar, maybe with three pegs down, and they were talking. That's what it looked like. But then a US recession is a fantastic reason to tell you why the market tanked. So it's a very important reason why the market tanked. Actually, what really happened is there were more sellers than buyers. It's as simple as that. This is the only economic answer which one should give. But yes, US recession fears will always be there, and US recession fears, US presidential election fears will always contribute. Second, I want to cover my base completely, okay? So rising tensions in the Gulf area, right? So will Israel attack Iran? Will Iran attack Israel? Will they bomb each other? We've been talking about this for a very long time. Will oil prices go up, and therefore will Indian economy be impacted? Good question to ask. The other reasons, of course, market being overvalued is there. Then there is rising oil prices, perhaps. I'm not sure that the oil prices will go up, but yes, rising oil prices could be a reason why the market could have reacted. The yen trade carry, which means people from US or Europe or Japan or Singapore went to Japan, borrowed money, or didn't have to physically go. They borrowed money in Japan, and they did a trade, the yen trade. So was it so bad that if interest rates in Japan go up, will the market crash? Is it true? I really don't know. I'm not very sure about that. But yes, that is one more reason why I can give you as to why the market came down or market crashed, typically what they say. But remember, on 5th of August, if you have just wiped out the gains of end of July, right? Maybe 15th of July, the market was at 78, 79,000 index. That's it. So 10, 12 days, 15 days gains being wiped out is not a crash, right? So these things are to be expected. If you are an equity investor, expect to see a 10% fall in your portfolio at least 5-6 times in a year. 20% or 30% maybe once in 2-3 years, and 50% fall maybe in your lifetime once or twice. I've seen it once, right? 1993. So these things will happen. These are not things to get scared about. In fact, yesterday in one of the WhatsApp group, I saw a comment saying market has crashed. And I said, if this is what you think is a market crash, maybe you should just be in RBI bonds. If you do not know how to take even such a small correction, which is, like I said, 15 days of market growth correction, if you can't take, there is something wrong. It will actually be worse. I don't think today we have, on Monday we have seen the worst. Maybe market will go down even further. I don't know. Right, I did a video some time back about how we can't predict the markets, right? Some time ago, Bangladesh looked like a great economy. Maybe 4 years ago, Sri Lankan economy looked great, right? Suddenly, something happens and the whole thing goes off like this, right? So it can happen for a small company also, right? So we don't know what is going to happen in the future. Is something which we have to be ready to accept. Is it something for you to panic about? 15 days of growth? No, not really. If the markets recover, it will make it up. And the most important thing is, Indian investors today have been brought up by salespeople who say market is a longish bull run, which occasional drops like this. When the market drops like this, it's a fantastic opportunity to be buying. So if you're doing your SIP in XYZ fund, which is say 10,000 rupees per month, and now you see a market fall like this, go and put another 10,000 in the same fund, right? Whatever you want to do, there is enough noise around you to say, yes, the market has fallen, yes, the market has got crashed, yes, it's a huge crisis, but if you invest during crisis, you will do very well. The same people who will have very scary headlines on Tuesday saying what happened to the market and why it fell and what you should do, how Ambani lost 10,000 lakh crores or 10,000 crores of market cap, right? How you lost, how the country lost, what, 15 lakh, 16 lakh crores, right? With all these headlines, they will expect you to stand tall and go and invest. I am having fun making this video. Don't get carried away by what has happened. Yes, market could go down further. Yes, market could go up higher. But remember, if you invested for your son's education or your daughter's education, which you require when they are 21, and now he or she is 3 years old, which means you've got 18 years to go. If you're say 40 years of age, you got maybe 20 years to go for retirement. You invested for that. You did not invest for day-to-day gain. To you, it doesn't matter that the market fell, that the Japanese carry trade fell, that the oil prices could go up. Yes, all those things could happen, but you are looking at what the market is going to be 18 years hence or 20 years hence, depending on your objective. If you're clear about your objective as to what you want from your portfolio, you will not panic. Be my guest, anybody and everybody has a right to panic, but do you need to panic is a call that you have to take. Yes, it's scary. But whether you should worry and jump out of the window saying, oh my God, market has fallen. No, it is definitely not that range. Can it be called a Black Monday? Yes, by those people who don't have money and who are speculating, who have money only till end of day. For those people, yes, it's a scary market. If you are doing an SIP, which is money required after 5 years, 10 years, 22 years, don't even worry about it. Don't even think about it. Should you go and put more money now that the market has fallen? Be my guest. I don't know whether the market has chopped, right? What happens if on Tuesday and Wednesday market falls even further? We have no clue about all that. So just continue what you are doing. You don't have to double up and say, now this is the bottom, I should buy. We don't know. Understand that we don't know. That is the best thing that you can do from learning from a fall like this. A 3% fall, it's just, it happens very regularly. Thank you.